Hey guys, welcome back to another cryptocurrency video on the official Joshua Earp YouTube channel. Thank you for tuning in, and hope you guys are having a good day. So I wanted to cover a little few updates with Bitcoin. Obviously, we just had CPI numbers come out at 9.1, which is, not really good news for the market. And I just wanted to kind of touch on a few things for you guys today. So the one thing we have going for us, as we explained in the last video, is that we have this yellow line that has always served as the bottom. So as long as we're above this yellow line, then technically, no matter how bearish it gets, we can still be considered bullish. The moment we drop below the yellow line and retest it as resistance and continue down to the downside, then that's where you're going to see me personally get very bearish. So even though I'm a macro bull as well. But it's very interesting what's happened because I'll just do a little update. As you can see, we had a break through the very critical support line here around 19.7, and this is the daily chart we're looking at right now. And so when we zoom in, what we can see is that, like I said, we broke below, and we even actually wicked below the spider line. That's how crazy accurate these spider lines are. I mean, it's literally almost called the body right here, called all the bodies of this candle right here, and called the bodies of all these candles right here. So very important to understand these spider lines, where they're placed at. They serve as very strong support and resistances, and the price is magnetized towards the spider lines at all given times. And so the whole thing is, like, it's good to have these short-term patterns like triangles, or there's a million different type of patterns, right? Like double tops, double bottoms, etc. We can go down the whole list. But the thing is that these spider lines are longer-term trend lines, and so they have more weight than kind of these short-term patterns. So even though that we had a break through this triangle, it's called the symmetrical triangle, even though we had a break below it, which could be considered bearish if we're looking, at these short-term patterns, the thing to understand here is that the spider lines are still keeping us afloat. Okay, so it's very, very important to understand this and where this is. Now, another very critical thing is there's a lot of confluence around this area that we're at right now. Not only do we have this white line, which is a very, very strong, weekly line of confluence as far as, support and resistance, but also on top of that, we have this pattern, the symmetrical triangle, and it's all right around the same exact area as this spider line and the monthly open. It's all very, very close together. And so this is a major area of confluence. Now, I want you guys to be careful because we're at an undecided point in the market. And so when we're at an undecided point in the market, it's always best to wait for confirmation. I can't stress to you guys enough how important it is to, instead of trying to predict the market, we simply react to the market. And trust me, there's a lot of money to be made by reacting to the market as well. And also, it's very good to have this indicator. I'm not really big on indicators. I will show one towards the end of this video if I remember. It's called moon phases, and I'm going to show the significance of that and kind of what that's telling us. But, the more I look at this, the more I see that, this monthly open is a very critical zone. Okay, so if you were shorting, you would want to put your stop loss, above it and kind of short to the downside. If you're going long, you would want to, probably put your stop loss somewhere around the bottom of this candle or this spider line. And what you would want to do is you would pretty much want to wait till the monthly open, meaning that you would want it to come and test the monthly open as support, because right now we're testing it as resistance, as you can see by these two daily candles. So the monthly open is a very high point of resistance. And really, the more I look at it, the more, let's just say this, I wouldn't be opening up a long anytime soon until we pass this critical monthly open. And if we test that as support, continue up to the upside, then maybe I would consider taking a long, and I would just put my stop loss somewhere below the monthly open and just kind of play it like that. So I just want you guys to be aware of this. It's all very important information. Let's go to the 4-hour. Keep in mind we do have some bearish news as well with the CPI numbers coming out. So, and we're going to also be talking about the DXY as well. But you can even see right here the confluence between the daily and the monthly open once we go down to the 4-hour. You can see that you really need to have these on your chart. The daily, weekly, monthly, yearly open. You just type that into TradingView, and then that way you'll have some very key areas to serve as stop losses or take profits. Combined with the spider lines, combined with market structure, combined with volume, combined with a few of the other things I'm going to be sharing with you guys. So that's basically what I'm monitoring right now. That's the game plan. I would not be entering a trade at all right now, especially with the the CPI numbers and the undecisiveness of the market and how we keep bouncing between the monthly, daily open. And you really want to wait for confirmation. You really, really want to wait for confirmation before you enter a trade. Now, the interesting thing to note here, let's just go to the 1 hour, is that you'll see that we're in just, a strange time right now in the market. I mean, we're consistently making higher lows. Even this is technically considered a higher low if you're just counting kind of the bottoms here. So we're consistently making higher lows, but it is starting to look like it's going to even out. And if this monthly open keeps testing as resistance, and the old rule of thumb is the more times you knock on the door, the easier the chance it is to get in. Very, very important stuff to pay attention to, guys. Okay, so that's what I wanted to talk about as far as Bitcoin. Now, there's also something I wanted to talk about as far as the DXY. One last thing I do want to mention as well is that there is an important indicator you guys need to be aware of. It's called moon phases. So if we come here, I'll just turn it on real quick. Basically, every time there's a full moon, it's best to take open a short, right? And there might be some kind of action right here. Let me go to the daily just so you can see it better. Because even in a down market, there's always going to be some type of volatility, right? It doesn't always go straight up. It doesn't always go straight down. You are going to have these mini pumps in this move. So the thing is here is if we look up here, when we were around the 30,000 mark, this full moon right here, if you would have opened up a short, even though there was this U type of pattern, which is like a little mini pump, I mean, kind of like what we're seeing here with this new moon, it's kind of like a mini pump, and then it just goes straight down. And you can see that right here, this incredible move. I mean, if we were to measure this move, let's check it out. This would be, 43%, which, if you're using leverage, that would be ridiculous. So let's really hope that this yellow line, what I call the bottom indicator, holds us up. But it's getting a little scary because we are in this full moon, and when we were in this full moon and we had this type of candle structure, we had a huge dump, and we can see this downside here, and it's just it is what it is. So you guys got to be careful. You got to watch out. It's not a time to play around right now. Trading is not gambling. If you're just dollar cost averaging and just continuously, and you have a 5-10 year strategy, and you're just starting now and you're just DCAing in and hodling, that's a whole completely different story. But we have a lot of people on the channel that are leverage day traders like myself. I also have my hodl portfolio and my leverage trading portfolio, so you want to keep them both separate. You have to have discipline. If you can't be disciplined while the amounts are small, you'll never be able to be disciplined while the amounts are big. So that's a few things I wanted to talk about. Now let's go ahead and check something else out that I think you guys will find interesting. Let's go look at the DXY. Because remember, with the DXY, it's the strength of the US dollar, and the higher the strength of the US dollar, basically, and let's go to what are we at? The daily, so let's go to the weekly as well. But the stronger the US dollar, the lower the prices of assets are going to fall, and vice versa. It's a correlated asset, just kind of like the S&P 500, which we can also take a look at here in a second. Now, one thing I wanted you guys to notice about the DXY is if we go to the monthly here, okay, and we zoom out, which when in doubt, zoom out, and we go back all the way to this price history, we will see, and by the way, this type of technical analysis you're seeing right here is the Gann fan method, I believe, GANN, for you technical traders out there. But when we look at the monthly candles and we zoom all the way out, at least on this specific chart, you'll see back in January 1st, 1985, we got all the way up to 165 on the DXY. Now, this was all the way back, like I said, in 85. Over here we have, November 1st, which is the top of this specific, this peak right here. And then we had some bearish activity. Now you can see we're clearly going up in this upwards direction. And the thing to understand here is that the DXY is in price discovery mode. That means that now that it is broken out from these two highs, it now is on its way to, I believe, potentially get all the way up here to 122. And if it breaks above this specific line, we could see further, upwards motion for the DXY. And that means that Bitcoin is going to be going lower. And I hate to say that because I'm a Bitcoin bull long term, and I'm not a big fan of the US dollar because the word fiat comes from the word forced, which means people are, the Latin word for forced means people are forced to use this currency. I really personally think that the US dollar is the greatest shitcoin of all time. That's personally me. Coming from a guy that, read The Creature from Jekyll Island a long time ago. I got the book sitting right here on my desk next to me. And so what we're saying is, guys, you need to be very careful if you're going long in the market right now. Even if you're dollar cost averaging. I mean, the best thing to do, in my opinion, would be to continuously watch the DXY. And as it continues to go up, I would not be going long, essentially. I would not be going long right now. That's just me personally. You guys do whatever you want. But that's just me. So I wanted to cover that. And I'm going to keep today's video a little bit short because, I just really wanted to cover a few updates as well with Bitcoin, specifically on the, on what my mindset is right here with the current market, right? So especially with that monthly open and all that. Now, when we look back at the weekly chart, okay, I'm going to zoom out a little bit. I guess we'll do monthly. It's kind of easier to see. But when we do monthly and we look at the price of Bitcoin over time, you'll see this red line right here going down. And what this is, it's actually better on the weekly because you'll see it's more accurate here on the weekly. So what I'm really waiting for is, I believe that as long as we stay underneath this red line, we have a lot of potential downside. I mean, even if we come up and spike and have, what's called a suckers rally or relief rally, and we come and we spike up all the way to hit this line, I'm still not going to be that bullish because it's not until we break out of this line that we would be considered, as my brother Naeem says, out of the woods, right? We're not out of the woods yet. I mean, you can see right here, how many people thought that this was the bottom right here, right? Whenever it spiked below, came up, it was a bull market, everyone was feeling great, everybody's happy. And like I said, we touched this as resistance, and then what happened? We proceeded to dump like you've never seen before. Bam. Went up a little bit, didn't even touch the line again, dumped again. Okay, now we're going up, and honestly, we're not even really going up that much right now. And so, the yearly open is all the way up here at 46,575. Monthly opens down here at 20,301. And so this is what I'm monitoring, guys. This is what I'm waiting for. I'm looking at, obviously the short-term patterns and the spider lines and all that, but what I'm really looking at is to make sure we don't go below this yellow line, and also to wait for a breakout of this red line. Okay, and the moment that we see that happen, then we could say that we are officially in the next bull market. But until that happens, and once again, coming from a Bitcoin bull, myself personally, and I do not like saying this, but we most likely have some further downside ahead of us. And so I would wait for the DXY to top out, or what I perceive to be a top out, and then I would go long. And until then, you could just say neutral, or you could even entertain a short. Like I said, I'm a Bitcoin bull. You just got to be careful going long in a bear market, okay? So the odds are against you. But if you're going long in a bull market, then your back is against the wind, right? So it's better to wait for a pump and then short if at the top of the pump if you are in a bear market, because you have to identify your environment. You have to start with the higher time frames. I see a lot of you guys are asking me questions about trading and this and that and all. One of the common themes that I'm seeing is you guys are just zoomed in on these small time frames. And don't get me wrong, I like to look at the small time frames too, but I'm always zooming out. I'm always looking at the big picture, identifying the macro trend, and then going more granular into the micro trend, and then making decisions based off of that. And just realize that, you want to trade less and you want to profit more. It's very, very important. Okay, so this is what I wanted to share with you guys today. And also, I wanted to mention that over here on the channel, by the way, I'm trying to get up to 1,000 subscribers. So if you guys could, subscribe and hit the like button, and if you could leave a comment below, we would really appreciate your thoughts. Are you bullish? Are you bearish? What are some of the things you guys are looking at? This is our last video that we did about 23 hours ago, and I also added a podcast that Mike Tyson and I did, where we both interviewed Mr. Graham Hancock. So if you guys, it's not really crypto related, but I wanted to just put it in there as well if you guys are interested in checking that out. And if you go to the About page of my YouTube channel, you'll be able to see, there's a link to my Instagram so we can connect on social media, and then also my marketing company. Okay, so there are a few scammers out there. This is my Instagram profile, and so make sure that it's joshua.earp, not any underscores or anything like that. I will never reach out to you and ask for you to invest in anything, right? So be aware of the scammers out there. This is my only account, joshua.earp. This is my only account. And so that's me. If you want to connect on Instagram, I also drop more content on there pretty frequently. And then also there's a link in my YouTube About to basically my marketing company. Okay, so you can see some of our clients here. You can kind of scroll through here and check some of this out. And we don't just work with only big brands. We work with a lot of other brands as well. And yeah, we do search engine optimization for the past 10 years. I've spoken on stage with Steve Wozniak and opened up for Edward Snowden and teach the CEOs for Warren Buffett's companies and won 15 Emmys. And there's just a whole bunch of stuff that we do. So if you guys are interested in marketing, definitely check that out. RealizeTheMarket.com. And then also today I'm wearing my Raise t-shirt. Raise is a project that I'm involved in, and it's private equity fundraising on the blockchain through issuing a non-fungible token that converts into a share within a company. So that's another amazing project that I'm working on. This is the website raise.finance. So it's raise.finance, and you guys can learn more about that if you'd like here. And we're also, this is the Founder Circle, so Brian Anderson, Lucas Fleury, co-founder of Block V, Kyle Kemper. We got a few amazing people like Sam Borghese. We also have myself, Joshua Earp, a few others. And the cool thing is that Lucas, the first NFTs were called Virtual Atoms, and they were created on the VERC20 token from Block V. And Lucas is a co-founder of Block V, and they've pretty much built the world's first NFTs, or some of the first batch of NFTs. So he's the father of the technology behind it. These are some of the brands that he's also worked with, and I believe he started this company with the co-founder of Tether, Reeve Collins, and a few others. And so this is our new venture. It's called Raise.finance. Very, very interesting. I'm very glad to be a part of the community. And like I said, that's basically it for today, guys. So definitely check some of that stuff out. I do highly appreciate all of you. Thank you so much for tuning in, and I will see you in the next video. Talk to you soon.